Bibby, Managing Director and Chief Executive Officer for Akora Resources. Thank you, Merlin, for taking the time to video me. Akora Resources is iron ore in Madagascar. We've got some tremendous tenements, and since listing in December of 2020, we have progressed the projects at a pretty good pace, considering the difficulties with COVID and the like. We've had 3 drilling programs. We've confirmed the maiden resource of just under 200 million tonnes of iron mineralisation. We've done various product trials showing that there's a unique characteristic at Bekisopa where the iron mineralisation readily upgrades to higher grade products suitable for fines to sintering, but more importantly, a concentrate product that is suitable for direct reduced iron pellets for the green steel future as the iron and steel industry decarbonises. So a lot of knowledge has been generated, and we're looking forward to a busy year again this year to progress the projects.
Paul, thank you very much for the introduction. It's been a year since I last spoke to you. You've got a very fine chandelier there. Are you at home?
No, look, I'm actually in Hong Kong. There's a mining event in Hong Kong this week, and I've been meeting with investors, and this is my hotel room. Quite fortunately, I get a discounted rate because I'm at the conference. Otherwise, I'd never be able to afford to stay here. So,
good. What's the attendance like? What's the mood in the conference?
It was very good. Lots of interested investors. I would say there was 30 or so companies presenting, and lots of investors showing interest. I had a fairly full meeting schedule, so it was all good. And those people had done their homework on Akora and were looking favourably to hear the story and see how they could work with us going forward. So no, I think it was good for a first time back after probably 3 years since the last mining conference like this.
Goodness. Well, it's certainly been a pretty rough time in the junior market in the resources space for the past 12 months, really. We've seen kind of valuations crushed, and Akora is no different. I think when we last spoke, the share price was in the 30s. It's actually, I think it was 36, and today it's 18 cents. It's one of those kind of strange ironies that the share price halves, and yet your project has advanced. The key now is to try and get that share price up. Surely as a shareholder, you're going to be and a director of the company. That's your key mission. How do you see that happens? What are the key steps that you've got in the near term that are going to help you and your shareholders?
Certainly, I think there's a couple of points to be made there. Firstly, over the last 2 years, we've done a huge amount of work on the ground to understand the ore body, understand the potential products and the like, and it's all been very positive, all been encouraging news. We had a great announcement last week for the DSO infill drilling program, and that got a lot of interest from investors and a response to the share price, which was great. Where I've fallen down, and I think it's been an issue for many companies, is that we haven't been out and about marketing ourselves and telling the stories consistently. Now, COVID was part of that, but since COVID's finished, I have decided that I've got to get out and talk to investors more and get our story across while still doing the work on the ground at Madagascar. And I honestly believe that this is a good time to be doing it because our knowledge is at such a position now with the maiden resource, with the infill drilling program completed, which is giving us confidence about a startup project for direct ship ore. And also we've done the scoping study last year, which is giving us an understanding of capital and operating costs. So we're in a good position to talk to investors and answer those questions that they have for a company like ours with a lot more confidence. Okay,
I looked at that scoping study. I've had the privilege to work in iron ore a little bit, and I know that one of the there's a kind of a saying that in gold, the hard thing is to find it, and once you've found it, it's relatively simple to get it out. But in iron ore, it's relatively easy to find it, but the difficult thing is working out what to do with it. And I see that in your scoping study, you've got a number of scenarios. But for me, what jumps out is the fact that you've got, about just under 8 million tonne potential of DSO, because that is a low CapEx route into production. Can you just tell us a little bit about that first, and then we can go on to the kind of the other options?
Yeah. Look, it may be true that iron ore is easy to find, but to find high-grade iron ore at surface, which is easy to mine, isn't necessarily the case. At Bekisopa, we've got two, levels of iron mineralisation. At the surface, we've got outcropping iron ore grading 67%, and then in the weathered zone, we've got high-grade lump and fines DSO, which is grading 64, 66%, and good intercepts. So that, for us, is a low capital and operating cost, as you said, Merlin, to get into production quite readily. And then with the margin that is there at long-running prices, we've got the chance to generate funds, put that into capital to increase the production potential, and then move to further processing and making concentrates for the green steel future. So that's what's different about Akora's project at Bekisopa. And we've shown that the fresh rock, which is grading 35 to 45% iron, can readily upgrade at 75 microns, or rather coarse grind size, to 70% iron, ready for the green steel future for making direct reduced iron pellets. So we've got two quite unique iron ore mineralisations and relatively low capital way to get into production going forward. The issue, as you said, is always the logistics, I believe. And with the scoping study with Wardell Armstrong out of the UK, they drove the road and they felt that 80% of the road was in good to very good condition and suitable for trucks to transport the iron ore to the port. And we haven't done enough time yet at the port to understand the costings, but we've allowed a substantial fund of money, allocation, in the capital costs, to put in stockpiling area, conveying systems, ship loading systems to, produce around 2 million tonnes or 3 million tonnes per annum and load ships efficiently at the port.
Goodness, thank you, Paul. Lots to unpack in that. Just a really quick question: that the fresh rock, is that still in hematite, or does it move to magnetite when you're down at 30? Or not when it's at the 34 to 37%?
So at surface, we've got predominantly magnetite, but also hematite. But in the fresh rock, it is predominantly magnetite, and that's why it's ready to. It's able to be upgraded for two reasons. One, you can use magnetic separation, because of the magnetic properties of the iron minerals. But also at Bekisopa, the iron mineralisation is relatively coarse, so you don't need to crush it and grind it to fine sizes to liberate the iron minerals to get the high grade or premium grade products.
Let's just look at the lump, the weathered profile. I think in your infill drilling you talked about drill hole depths from 5.6 meters to 29.6 meters. So presumably that reflects the weathered profile. If you've got 8 million tons on that, what kind of are you anticipating? Are you looking to do the DSO part of the operation in 3 years or in 8 years or whatever?
The drilling we did, which completed in October of last year, it was on a 50 by 50 metre grid on an area of about 700 metres by 600 metres. The intercepts that we saw for the high-grade iron mineralisation were numbers like, 8 to 12 metres at 66%, 9 and 10 metres at 65%. So selective mining, we are going to be able to mine the areas that give us the highest grades and the best margins, and go from there. The results are being sent to Wardell Armstrong's mineral resource estimators, and by the end of May we'll have their estimate of what the tonnes and grade in the DSO in the southern zone is. And we're expecting the numbers to be at around 8 to 12 million tonnes, which is sufficient for a start-up operation at 2 million tonnes a year, for 4 to 6 years. The reason that we're wanting to do that now is that we can then start to talk about some of the scoping study numbers, because that resource will be in the indicated to measured category. But clearly, as we do more drilling, we'll identify more high-grade DSO, is our expectation, which then gives us more years
of
mining of the high-grade lump and fines DSO going forward.
You say clearly. Is that because there is more of that weathered material? I mean, how do you know? I mean, why do you say clearly? Have you got geological expectations that there's going to be more?
Well, I guess there's two or three reasons. I'm a metallurgist, not a geologist, and I've overseen the geological work for the last 2 and a bit years. And I must say, all but 2 holes that we've drilled of the 148 holes have intersected iron ore. So it's been a very, very good strike rate. The 85 holes we did in the infill drilling all hit iron mineralisation, and 75 of them at quite high grades. So, and that's just in the southern zone. We got the ground magnetic survey that we did, and that shows a 6 kilometre long magnetic anomaly north to south. We've only drilled intensely the bottom 700 metres. So there's another, 5 or so kilometres to drill where there is a strong magnetic anomaly, and where we've seen from our previous drilling to be some good near surface intercepts. So we're very hopeful, very confident that with more drilling, we will intercept more high-grade iron ore suitable for DSO. And that's in the drilled part. On surface at Bekisopa, and it was one of the reasons we've chosen to work on that project first, is you've got the large areas of outcropping iron ore on surface. Rocks as big as a dining room table or a football that are sitting there waiting to be picked up and crushed, and the rock chip sample's graded 67%. So that hasn't been measured or defined as part of the resource, but it's there as well. So we feel at the minute there's 10 million tonnes plus or minus a little bit, and that will be borne out with the with the mineral resource estimate by the end of May. And with further work, we could add to that. But that is sufficient to justify getting a project underway.
Yeah. No, absolutely. I mean, if you can produce 1 or 2 million tonnes of lump ore DSO, your lump and fines, but direct shipping, that you're really cooking with gas. I mean, that's a hell of a thing.
Yeah, absolutely. Look, if I put it into numbers, today the iron ore price I think is $126 a tonne for 62% iron. If we ship out 65% iron, which we believe is feasible because we're seeing numbers at 66 and 65 in the ground, they just need to be crushed and screened. That's 3% iron better than benchmark, so that should add $18 to the price. And the lump ore has a premium typically of $12 or $15. So very quickly, the price for the product of lump iron ore out of Bekisopa is a number like $150 or $155. And the operating costs, we need to firm up on those, but I've always said it's a number like 42, but if it's 50, you've got a margin of $100 there per tonne. So at a 1 or 2 million tonne per annum operation, you've got approaching $200 million in revenue, which is sufficient to pay off the initial capital in a year. And then in the second and third year, that money can be used to improve the process, but also add equipment to enable you to do more crushing and more screening and grinding to produce further upgraded products from the lower grade fresh rock material.
Okay, got it. What did the scoping study kind of kick out in terms of a CapEx number to get that initial production into play?
Yeah, look, I'll only talk in round numbers, if that's okay, because we haven't been able to make the scoping study public. There's also been a research report done on the company by Aurea Capital, Simon Francis out of Hong Kong. And that's on our website under investors and research, and that's worth people having a look at. Because Simon has done a very thorough review of the company, but also looked at what the opportunities are in relation to green steel and what that really means in terms of demand for high-grade iron ore going forward, and some competitor analysis. The numbers for capital, we've put a number of about $200 million to do the 2 million tonne per annum project. That $200 million has a $40 to $50 million contingency because some of the large items around the road and the port need further work. The costs for mining, processing, infrastructure accommodation for employees because Bekisopa is in a very remote location and we're going to have to bring people in, community facilities and the like, is only around $80 million. So, 80 for mining, processing, and buildings and facilities, 30, 40 for roads, millions, 60 for a port, and that could be way down, less than 60, as we do further work to understand what the best option is in terms of stockpile laydown areas at the port area and conveying systems and ship loading. So we've been conservative, but I think at this stage that's the right thing to do. So that's where it looks like being for the capital costs for the DSO production.
Why was the scoping study not published?
Because our resource last year, the just under 200 million tonne resource that we'd reported on in April, is in the inferred category. And the rules here in Australia are that you have to have indicated or measured, a higher quality resource grade. And the infill drilling will enable us to do that because the drill pattern is at 50 by 50 metres, not 200 by 200 or wider, as it was previously.
Yeah, interesting. In Canada, you can put out a scoping study or a PEA on inferred resources, but you can't do a PFS unless you've got the measured and indicated. These differences in the code are quite interesting. Good. Now the port Toliara, down in the south of Madagascar. I mean, Madagascar's a challenging environment. It's not. There aren't as kind of a superabundance of companies which have made a huge success in Madagascar, and in the south there you've got Base Resources with the Ranobe mineral sands project, and they're now looking at the rare earths. But they've been stuck in a dispute with the government about the port for years. They are talking about resolution, but
look, I am not fully across the Base Resources situation. In the background in Madagascar, the government has been looking to review the mining code, and that really, I think, is the crux of the matter, so to speak, as we're here today. The mining code, they're looking to improve it. It's a good mining code to ensure that the government gets due reward for mining projects that are happening in the country. And because that hasn't been settled, these other issues, I believe, are simmering. And once the mining code is settled, and it looks to be getting closer for that to happen now, closer than it's been before, I think these other issues will be resolved because there's a reference point in terms of a confirmed mining code. In terms of mining activity in Madagascar, you've got Rio Tinto's titanium project at Fort Dauphin. It's been producing successfully for quite a number of years. It's a multi-billion-dollar project. You've got the Ambatavi nickel laterite project in sort of central eastern Madagascar. That nickel laterites are a difficult project no matter where they are because of the mineralogy and the chemistry and so on. And then they're massive processing plants. They always start off difficultly, even in Australia when they've done those sort of projects. So my understanding is now that the process is running well with nickel prices where they are. The project is making good money and things have settled down and going well. So, yes, they may have had some teething problems, but I understand that that's now going quite well. There's a number of graphite projects in the country that are delivering, and there's several graphite companies that are looking to develop their projects and get them into production as well. So I think things are about to happen, but the main sort of overriding issue has been resolution of changes to the mining code. Now, I don't believe from my discussions with the mining minister, that they're daunting type issues. For iron ore, which isn't necessarily a focused mineral in Madagascar, things like gold and oil and, rare earths and the like are. But for iron ore, they're talking about increasing the royalty from, say, 2% to 4%. And in my discussions with the mining minister and the mining department people, we are quite comfortable with a 4% royalty. That's a very competitive royalty compared to other countries. And at the end of the day, if you have a good project, and we believe we have a good project, a royalty like that is a sensible fee to pay the government to do works for the community and elsewhere.
Thank you. Have they given a timetable on the resolution of the mining code? Is there a deadline date or an announcement date or kind of a plan?
I don't believe they've given a deadline date. I think if I was in government, I certainly wouldn't do that, because the chance of it not being achieved is, I guess, fairly high. Look, we know in the recent months there's been good discussions at the mining department level and the ministry level. They've been working with the World Bank, and they've fine-tuned the mining code and the upgrades to that, I understand. And hopefully those discussions will be had, and decisions will be made soon.
The port at Toliara, I think it's you can take small vessels in there. It's not a hugely deep port. It's not a deep water port. So, are you thinking about transshipping out to a deeper water area, or are you? Or have you not gone there in the studies yet?
Look, we have visited the port. We had a very good visit actually with the Wardell Armstrong engineers and people from the local area to assist us. The port is predominantly a container port, an incoming container port. There's not a lot of outgoing shipping happening there. We not only drove out and walked around the port area, but we actually got in a boat and went for a sail and had a look around. And at low tide, the depth was 8 metres. At high tide, it's around 12. So that's suitable for Supermax vessels, which are common in the bulk minerals carrying sort of area. And they're sort of 58,000 tonne vessels. So when you're looking at 2 million tonnes per annum, you divide that by 10 months, that's 200,000 or so a month. That's 3-4 boats a month, and that's all sensible and practical at that size. And that's if we set up a conveying and ship loading facility on the current container landing area at the port. One of the things we've thought about is actually going out deeper with a conveyor going out, say, an extra kilometre, which would then be a 5 or 6 kilometre conveyor, nothing dramatic, and having a ship loading berth there or two in slightly deeper water, which may mean you can get up to 100,000 tonne vessels being loaded. So they're the options that we're looking at, which is also why we've allowed for $60 million in the scoping study, because of the uncertainty about which approach we could do at the port.
Certainly there would be a lower CapEx choice if you use the existing port, but just with a kind of a layout yard, a kind of stockpiles and conveyor system.
Yes, very much so.
Yeah, that would save some money. Good. Talking about money, what are your requirements for this year? I mean, I can see from the financial reports, your December quarterly, that you're quite low on capital. You're sub $1 million. What's the work plan for 2023, the remainder of that, and how are you going to finance it?
Yeah, a good question, and it's a question that concerns many investors. Pleasingly for us, the first quarter, January to March, is a low expenditure quarter because in Madagascar it's the wet season, so we can't drill, we can't do geological work, and it's an opportunity for us to do our desk work and get on top of the results from the previous year and plan for the coming year. I've submitted 2 budgets to the board. One at $3 million, which enables us to do continuation of the work at Bekisopa and some preliminary work at the Satrokala tenements, where we did rock chip analysis last year. And I'd like to do a magnetic survey of that ground, because that looks to have a 10-kilometre strike, whereas Bekisopa is at 6 kilometres. So quite a promising prospect there. So with an extra $2 to $3 million, that would comfortably get us through 12, 15 months without trouble. But as you've seen, Merlin, we haven't raised much money since we've listed, and the majority of our money, the greater majority of our money, goes into drilling and geology. It's not going into overheads and the like, G&A. We also have a second budget, which is set at around $6 million, and that budget is a adventurous budget, but enables us to work on Bekisopa, Satrokala and Tra Marina. The lessons we've learnt in the last 2 and a bit years at Bekisopa are readily transferable to those other projects, and we'd like to accelerate the work on those in terms of magnetic surveys, exploratory drilling and the like, so that we can then understand, which is the next best project to work on, as well as Bekisopa. And Satricala is an obvious one because it's 40 kilometres closer to the port than Bekisopa, and looks to be a very similar mineralogy, but possibly even larger size project than Bekisopa. Tra Marina is on the east coast. It hasn't got the logistic issues that we see at Bekisopa and Satricala. It's only 16 kilometres from the ocean, from the tide line. It is a classic banded iron formation. We need to go and do the magnetic survey, some more exploratory drilling to better understand the extent of the mineralisation, and then we can use the knowledge that we've got from the scoping study at Bekisopa to understand the capital cost for that project. But it hasn't got the logistic issues that we have on the other one. So we actually would like to progress all three projects. We understand that now possibly isn't the right time to go for such an adventurous budget. So we're weighing up our options at the minute about how best to approach it to ensure that the funds that we get are sufficient to do the right level of work, but also manage the expectation of our shareholders.
Thank you. When you talk about being classic BIF or classic BIF, does that mean that it's all magnetite, or is there some lump potential there as well?
The reason we chose to work at Bekisopa was because of the very obvious, significant outcropping of high-grade material. We don't see that at Tra Marina. Yes, there may be a small amount, but it's not substantial. We don't see it being 10 or more million tonnes. What we see there is a classic banded iron formation, magnetite grading 35%, but maybe a bit more, requiring to be ground down to 50, 70 or so microns to make a high-grade iron concentrate.
Right. For me, it seems crystal clear that Bekisopa is where you're at, because you've got the drilling in there already, you've got the scoping study there, you've just got to get the infill in and march that DSO operation towards kind of better resolution, better detail on the numbers. Is there a kind of even a reduced budget which can still do that? Or
certainly. So with the money that we have in the bank now, plus a smaller amount, it might only be $1.5 million, we could progress the project at Bekisopa, do the mineral resource estimate on last year's infill drilling, update the scoping study with Wardell Armstrong, and then consider which are the next best activities to conduct. And that could be the way to go. So one of the assessments that we will do, just as any investor would do, is forecast as best we can how we feel the world's going to be going forward. And are things going to recover sooner rather than later or whatever? So we've got to weigh up all of those things. We've done the homework on the budget side. We have been very good at planning and spending of our money. We've been very considered in how we spend our money. And we'll want to make sure we do the right thing by our investors, by not causing too much dilution unnecessarily.
What's the makeup of your shareholder register? I mean, do you have a kind of a list of people that you can go back to and say, this is where we're at? We're actually better value than we were 2 years ago. Are you going to, if we do a placement, what are you good for? Can you follow your interest? Are they long-term supporters?
Yes. So look, we've got about 500 shareholders, so not a great deal. When we listed, we brought across about 150 shareholders that had been supporting us in the previous years prior to listing. They are all still on the register. So they understand the project, they like the story, and they're waiting for, the big prize down the track. With the IPO and, shareholders along the way, a number of people have brought in. If you look at our top 20 and say compare it in the December report to what it was 18 months ago, you'll see some new names there. They have been building up sizable positions over the last 12 months. And there are others that I've had another one today come to talk to me and has been following the story and is wanting to know how to get involved in a bigger way. But because our volume, our turnover on the market is so little, it's a difficult task. So our top 20 shareholders hold 60%, and they've all been very strong and sitting and supporting us. And yes, we can go and talk to a number of those, and I believe they will be supportive of a placement. And then we have the majority of our shareholders. If we wanted to access them, I believe they will be supportive. But we'd also be very keen to bring in new investors who like the story and want to be part of the improvement and the uplift in the Akora story, to join the register or work with us on a placement, for example.
Yeah, absolutely. You're welcome to join the story, but write a check for $1 million and then you're in.
And you'd be most welcome. Our largest shareholder did that in the middle of 2019, and they're still there, and it's been fabulous. So if we could get a few more like that, that would make everyone's life a lot better. And it means that we can accelerate the work.
I mean, just from sitting here, it feels that, in a sense, the financing is the next key catalyst, because that will, how much money you raise will determine the work program for the rest of the year. And it's almost once you've, rather than saying this is the work program for the year, it's almost, let's see what happens to how much money you raise, and then you can articulate or clarify the work plan for the rest of the year.
Correct. So look, we've got, like I said, we've got 2 very clear budgets. They've got blocks of work in them, and depending on the funding, we know which of the blocks of work to initiate first, second, and third. And it's all a very methodical, sensible pathline, and it's based on the experience that we've got over the last 2 years at Bekisopa. So tried and true, sensible, and will deliver us further knowledge for Bekisopa or Satricala or Tratra Marina.
Paul, thank you very much for the interview. I really feel as if I understand where the company's at, the opportunity suite there. I'm particularly keen on the idea of DSO material from Bekisopa going out at 2 million tonnes per annum. And good luck with the year ahead.
No, thank you very much. Appreciate your time today. And as I said, one of the things that I need to do, as well as progress the projects, is communicate more with our existing shareholders and potential future shareholders so they better understand the opportunity as well and can come and support us. That'd be wonderful.